Governor, there is a war of liability within banks right now, and banks in a sense are making a case that look, we are not getting traditional savings because a lot of money is being channelized to stock markets. As RBI, what is your view? Are savings getting diverted into stock markets?
You see, I'll tell you, the whole position is slightly nuanced. If savings are going into stock markets, it's coming back to a bank. You see, when you buy a stock, let us say if I am buying some shares in the secondary market or I participate in an IPO, I make the payment, but where does that money go? It doesn't remain as loose cash. It goes back, it comes back to the banking system in somebody else's bank account. So therefore, yes, from the point of view of the banks, one set of deposits, one set of depositors probably, their deposit rates are coming down. In another category of deposit, the money is shifting from one account to the other account. But having said that, I think the broader point which you are making and which I quite agree is that the growth of deposits is in the order of about, the growth rate of deposits is in the order of about 12%. Whereas credit is growing at about 16 to 17%. So there is a kind of a mismatch. There will always be a mismatch because, it's not that you get 100 rupees by deposit and the same 100 alone will be given out as loan. And out of that 100, incidentally, the bank has to provide for CRR and SLR and other requirements. So, but when one loan gets sanctioned, money creates money, what is called the money multiplier. So therefore, while the credit growth cannot be you cannot have you cannot say that credit cannot grow at a rate higher than the deposit growth. It will always grow at a rate higher than the deposit growth. But there has to be some correlation between credit growth and deposit growth. Now, the deposits growth are in the region of about 12 to 13%. And historically, I think the deposits have grown around 13-14%. So, yes, to some extent, I think there has been some dip in deposits, perhaps because I think the propensity to spend more is now there. Consumption expenditure is, I think, picking up, but eventually that money comes back again to somebody else's bank account. So as economic growth takes greater foothold, I think one can expect the savings rate to improve. If retail savings are if retail savings are not growing, it's perhaps because of things like investment in mutual funds, investment in shares, or greater amount of spending, which is undertaken by the households.
But is RBI worried about the kind of options activity which are there in the system, loan against securities? Is that something which is a bit of a fly in the ointment? Is it a concern?
You see, loans against securities, we have, the RBI has given guidelines to banks and NBFCs also. Even with regard to NBFCs financing IPOs, 2 years ago we came out with some guidelines. Earlier the NBFCs could give any amount of loan, with regard to IPO financing. But we have set a limit. I think we have set a limit of 1 crore. 1 crore per borrower, we have set a limit. So therefore, that is one area where we are constantly monitoring. Like any other sector, these are all under our constant monitoring. And as and when some action is required, we will take them. But at the moment, it's sort of under our surveillance. That's it. I don't want to add.
What about real estate? In the past, Reserve Bank of India has flagged off concerns in the real estate sector. In the previous cycle, they have taken preemptive measures. Where do you see the real estate sector is headed? Are you worried?
You see, at the moment, I'm not unduly concerned about real estate sector as a whole. Construction activity continues to be strong, and the real estate number may look high because of the fact that the HDFC's assets got merged with the HDFC Bank. So both put together, if you compare year-on-year basis, the real estate sector growth looks high. But if you net out the HDFC component, then the growth of real estate sector is not something which worries us at this point of time.